What is going on, crypto enthusiasts? It's your boy Whiteboard Invest back with another exciting crypto update for you today. We've got a lot to cover, so buckle up and get ready for a wild ride. Today, we're going to be talking about all the latest happenings in the cryptoverse, including BTC price update. Michael Saylor, Bitcoin will become a $100 trillion asset. Mt. Gox starts BTC withdrawals. Is a comeback on the horizon? Inflation and the concerns of Wall Street. Grayscale's Ethereum ETF predicted to outflow $3 billion in first month. Arkham. Trump's crypto holdings surged to $10 million. Let's not waste another minute. Let's dive into today's hottest crypto news. Today, we're taking a look at the latest Bitcoin prices. As of today, Bitcoin is priced at $67,800, which is about 1.7% lower compared to yesterday's price of around $69,000. This slight dip is part of the usual volatility we see in the crypto market. Looking ahead, analysts are divided. Some predict that Bitcoin will bounce back and continue to climb, driven by increasing institutional interest and broader adoption. Others warn of potential corrections due to regulatory pressures and market sentiment. However, the overall long-term trend still seems bullish for many experts. And today, there's news involving influential figures in the crypto world like Trump and Saylor. We'll discuss their impact and what it means for Bitcoin in the later part of this video. Before diving into the next story, ensure you catch every moment till the very end of the video. Trust me, the juiciest updates await you. Michael Saylor, the chairman of MicroStrategy, believes Bitcoin could become a $100 trillion asset. He says the approval of a Bitcoin spot ETF, exchange-traded fund, is incredibly important for the entire crypto market. According to Saylor, this approval, expected in January 2024, will not only benefit the crypto market but also solidify Bitcoin's status as a major asset class. The most significant event in this market phase is the approval of Bitcoin spot ETFs. Saylor said on the podcast What Bitcoin Did. He added that this event has passed through a narrow door. Saylor envisions Bitcoin growing from a mere $100 billion asset to one worth between $10 trillion and $100 trillion in the future. While Saylor supports this approval, he also criticizes the U.S. Securities and Exchange Commission, SEC, for their overall approach to the crypto industry. The SEC has basically been an obstacle and is waging a war against the entire crypto industry. They're suing all the crypto exchanges and entrepreneurs, and we've had minimal acceptance of Bitcoin, Saylor pointed out. He explained his stance with two main reasons. First, the SEC has delayed the approval of options trading and hedging for Bitcoin spot ETFs, which are crucial developments. Hedging allows investors and financial institutions to protect their Bitcoin investments from risk, which is common for other asset types but still limited for Bitcoin. Second, the SEC only permits the selling of Bitcoin spot ETFs for cash instead of peer-to-peer, P2P exchanges. This means investors can't directly swap their Bitcoin for shares in other ETFs, which hampers the performance of these Bitcoin ETFs compared to traditional ones. He also mentioned SEC's rule SAB 121, which requires banks to list crypto assets on their balance sheets. This isn't a normal process for custodial assets and has prevented banks from holding Bitcoin and other cryptocurrencies for their clients. Saylor argues that most functions of a standard spot ETF are currently restricted by the SEC, making it hard for these funds to reach their full potential compared to regular ETFs. He stresses that activities like asset custody for clients, hedging trades, and P2P exchanges are normal and widespread for any other asset but are still not accepted for Bitcoin. This has slowed down Bitcoin's growth and acceptance. In his interview, Saylor also highlighted that cryptocurrency is becoming an increasingly political issue. He suggested that candidates who support crypto might gain more votes in upcoming U.S. elections. This trend is evident with presidential candidate Donald Trump, who recently expressed support for Bitcoin. Meanwhile, MicroStrategy continues to boost its Bitcoin holdings. Their latest purchase in March 2024 added 9,245 BTC, bringing their total to 214,246 BTC worth $15 billion. This ongoing investment reflects their strong belief in Bitcoin's long-term value and market growth potential. The Mt. Gox wallet has woken up, sparking concerns about a potential major market adjustment. On the morning of May 28, 2024, the wallet made several large Bitcoin transfers to an unknown address. This activity underscores Mt. Gox's plan to distribute assets to its creditors. Currently, the Mt. Gox wallet still holds a 137,892 BTC, which is worth over $9 billion. In just 3 hours, the wallet executed 5 transactions totaling more than $2 billion, causing slight market jitters. According to the announced plan, Mt. Gox intends to distribute 142,000 BTC and 143,000 BCH to creditors by October 31, 2024. This is part of their effort to settle the debts from the infamous hack and subsequent bankruptcy. To give you some background, Mt. Gox was once the world's largest Bitcoin exchange until it was hacked in February 2014. The hack resulted in the loss of about 850,000 BTC, causing substantial financial damage to investors and shaking up the global cryptocurrency market. This catastrophic event led to Mt. Gox declaring bankruptcy and getting entangled in complex legal proceedings. Now, the recent large Bitcoin transfers by Mt. Gox have raised concerns about their impact on the market. Moving or distributing a significant amount of Bitcoin can create substantial selling pressure, potentially affecting Bitcoin's market value. While there's no official announcement yet on whether these actions are the start of repaying creditors, the possibility remains that many creditors might sell their BTC immediately upon receipt. This could lead to a massive sell-off, driving down Bitcoin prices. As we approach the end of May, with Mt. Gox's large-scale distribution plan in place, investors need to stay vigilant and closely monitor further developments. If these large transactions continue, the market could experience significant volatility. It's crucial to stay updated and prepare suitable investment strategies in this ever-changing crypto landscape. To put things into perspective, here's a timeline of Mt. Gox's journey since the hack. February 2014, Mt. Gox halted operations, reported the loss of 850,000 BTC, and filed for bankruptcy in Japan. March 2014, 200,000 BTC were discovered in an old wallet. April 2014, Mt. Gox filed for bankruptcy protection in the U.S. April 2015, a Japanese court officially declared Mt. Gox bankrupt and began the liquidation of assets. June 2017, Nobuaki Kobayashi was appointed as the trustee for asset liquidation. April 2018, Kobayashi started selling Bitcoin and Bitcoin Cash to raise cash for creditors. March 2019, creditors began submitting claims for compensation. October 2021, the detailed repayment plan was announced, targeting the distribution of 142,000 BTC and 143,000 BCH by October 31, 2024. So far, Mt. Gox has not disclosed the exact date when they will start repaying customers. This situation remains one to watch closely, as the potential market impact of these large Bitcoin movements could be substantial. If you enjoyed this video, don't forget to leave a like and subscribe. Your support means the world to me and keeps me motivated to bring you the hottest news updates every day. During the 21st week of 2024, the financial market felt some pressure from the Fed due to inflation worries. However, trading sentiment quickly stabilized. On Wall Street, the big topics of the week were Nvidia and the ETH ETF. Let's start with the Fed. They were really worried about inflation, especially with the core PCE index announcement coming up on May 31. The core PCE is expected to drop to its lowest level this year if we exclude energy and food. But overall, inflation is pretty much flat. Interestingly, the PMI went up, hinting that inflation is still a hot topic. Combine that with strong job market data, and the market started worrying again about what the Fed might do with interest rates. Investor expectations for a rate cut by September dropped significantly, from 67% to just 45%, according to CME FedWatch. This shift caused the stock market to take a hit on May 23rd, with the S&P 500 falling about 1.3%, or 70 points. Despite the fears that inflation could push the Fed to raise rates, this seems unlikely. Inflation growth was really high in 2023 compared to now, and with commodity and energy prices dropping, a rate hike isn't looking very probable. The main factors affecting U.S. inflation right now are the labor market, with high wage growth and low unemployment, and housing prices, which are lagging behind policy changes. Now let's talk about NVIDIA. Even though the stock market overall took a dip on May 23rd, NVIDIA continued to climb. The company's stock jumped over 10% in 2 recent trading sessions, breaking the $1,000 mark. NVIDIA projected Q2 2024 revenues of $28 billion, give or take 2%, which is above the analyst estimates of $26.8 billion. Currently, NVIDIA holds a whopping 80% of the AI chip market. With AI investments showing no signs of slowing down, NVIDIA is expected to remain a key player in the market through the end of 2024. On the topic of ETH ETFs, Wall Street was buzzing about the SEC's approval of the 19B4 filing for Ether ETFs. However, these ETFs won't have staking features. The SEC is still processing the S1 filings for official listing, which could take a few weeks to months. This approval has raised market expectations for other crypto ETFs, but there are still many questions about their feasibility and demand. On the flip side, JP Morgan thinks the SEC will likely not approve Solana or other crypto ETFs due to the unclear classification of these assets as securities or commodities. Unlike Bitcoin and Ethereum, which are already traded on the CME, other cryptocurrencies still face regulatory uncertainties. Overall, it was an eventful week with the Fed's inflation concerns impacting market sentiment, NVIDIA's impressive performance, and the developments around ETH ETFs, keeping everyone on their toes. Investors will need to stay alert and adapt their strategies as these stories unfold. If Grayscale's Ethereum spot ETF goes the way their Bitcoin trust did, we might see some big money moving out. Picture this. It could see outflows of $110 million a day in the first month. Grayscale, the crypto asset management firm from New York, is upgrading its key product, the Grayscale Bitcoin Trust, GBTC, to a Bitcoin ETF, which the SEC approved in January 2024. Here's what happened with GBTC. In a report from Kaiko on May 27th, they noted that 23% of GBTC's assets, about $6.5 billion, exited in the first month after its launch on January 11, 2024. If the same happens with Grayscale's Ethereum Trust, ETH, which manages $11 billion, daily outflows could hit $110 million. That's about 30% of ETH's average daily trading volume on Coinbase. ETH shares have been trading at a 26% discount to ETH, so outflows and redemptions are expected as this gap narrows. When GBTC became a spot ETF, its discount to Bitcoin dropped from 17% to just 0.03%, stabilizing over time. Investors often pulled out their GBTC to preserve value or sold for better prices. Data from YChart showed that ETH's discount was over 25% on May 1st, narrowing to 1.28% by May 24th after the SEC approved Ethereum spot ETFs. On May 22nd, ETH's volatility spiked from 60% to nearly 90%, then calmed down. The funding rate for ETH perpetual futures also surged, reflecting changing investor sentiment. Even with potential short-term outflows, the SEC's approval of the Ethereum ETF is a big deal for ETH as an asset. It clears up legal uncertainties that have hindered Ethereum's growth, making this approval crucial for its long-term stability and development. Donald Trump's crypto wallet is making headlines lately. It's holding a stash of 579,300 MAGA Trump tokens, along with a hefty amount of ETH and MAGA VP MVP tokens. Altogether, it's valued at around $10 million. Now, let's break it down. The MAGA tokens alone are worth about $7.12 million. They were snagged using wrapped Ether on Uniswap. And get this, their value shot up by almost 50% in just a week, trading at around $11.99 each. But wait, there's more in Trump's digital piggy bank. It's also got some ETH, valued at $1.84 million, and 1 million MAGA VP MVP tokens, currently worth around $509,000. How do we know it's Trump's? Well, Arkham, the crypto sleuth, linked it to the former president using financial reports from August 2023. Back then, Trump was holding a boatload of ETH and raking in millions from NFT royalties. But what's really driving up the value of Trump's crypto cash? It's his newfound love for crypto, of course. Despite his past criticisms, Trump's recent pro-crypto stance has been a game-changer. He's all about supporting crypto now, advocating for self-custody rights and dissing central bank digital currencies. And don't forget his shout-out to Silk Road's Ross Ulbricht. And guess what? Trump's crypto cred puts him at the top of the celebrity crypto charts, leaving stars like Justin Bieber and Kevin Hart in the dust. Looks like Trump's making waves in the crypto world, whether you love him or hate him.
Alright, that's hottest news today. If you guys did find this video helpful, leave a like and subscribe our channel for more free content. Thanks for watching. Peace out.